Hey everybody, welcome to the second video on understanding some important aspects of fund administration. I'm a learning partner Sushila Hariharan, and if you're interested in a career in investment banking, operations, trade life cycle, fund accounting and OTC derivatives, do subscribe to my YouTube channel where we provide content-centric research focused videos on these topics. In this video, we're going to talk about management fees. I hope you have gone through the first video which talked about how capital is contributed into the fund and what is the fund administrator's role while looking into the aspects of capital contribution. If you want to learn more about management fees, just dwell into this video. Okay, as we already know, the structure of a fund is such that the general partner and the limited partner, both of them contribute capital into the fund. While the general partner is largely responsible for not just capital contribution, but also running the day-to-day operations of the fund, as well as determining what are the various aspects of the fund, deciding the investment strategy, structuring the executive management of the fund, putting in place the investment research team, as well as the traders who are going to take decisions regarding which asset classes to invest in. The limited partner is one of the silenter types in the sense that they are going to be contributing capital into the fund and they do not participate in the day-to-day activities of the fund as such. So as you can see, the fund structure largely comprises of one or two general partners and an infinite number of limited partners. Okay, so while capital contribution is possible from both sides, the main decision making lies with the general partner who is literally running the show, like the executive management of the fund. So naturally, the fund charges fees from the limited partner in form of two categories. The first category is the management fees and the second category is the incentive fees. Now, what are management fees? I've already uploaded 3 or 4 videos on understanding management fees. Now, management fees are the fees that are charged by the general partner, okay, from the partners, from the fund and from the partners, because they're managing the fund. As I just explained, the general partner literally runs the show in the sense that they put into place the executive management, they decide the investing strategies, they run the day-to-day operations, they do the settlements of the trade, they take into consideration multiple aspects of corporate actions, etc., etc., while the limited partner is contributing capital. Therefore, for running the operational aspects and the executive management of the fund charges management fees. Now think about it. When will a fund earn money? The fund will earn money only if they sell the assets, right? But they also have the day-to-day operations to take care of, and if they don't take care of the day-to-day operations, then how will they pay the executive salaries? How will they manage the rent and the light bills, etc., etc., right? I mean, those are literally very tiny and minor considerations, but in fact, it is a major consideration because we're looking at the working capital of the fund. Therefore, the management fees are charged to cover the working capital expenses of the fund. On the other hand, the incentive fees or the performance fees are charged for managing the outperformance of the fund. So if the fund is able to beat the benchmarks, cross the hurdle rates, overtake the high water mark, then they get a very nice structure of fund fees called as the incentive fees or the performance fees, which they can charge. Okay, so the general partner is very much interested in both the management fees as well as the performance fees. In this video, we're going to take a look at the management fees. The management fees is normally charged as a percentage of AUM, that is assets under management. Now, there are so many multiple aspects of these assets under management, and for us to dwell deep into these concepts, it is important to understand the concept of asset under management. Under management is not just the capital contribution from the different partners, it is also the value to which the assets have grown. Okay, so if a partner is contributing capital into the fund, naturally they want their capital to grow. If they want the capital to grow and the asset values to increase, then the increased value is called as the assets under management. That is the total value of the assets that has been invested by the fund. Therefore, assets under management, AUM, is one of the most important aspects of the calculation of performance fees as well of the calculation of management fees. Some funds charge as high as 2% of assets under management. Some funds charge 1.5%. Sometimes, like in the years of the COVID, like 2020, 2021, the performance of the funds, while they were not exceptionally good, even the markets were good, the fund itself decided, some of the funds decided to charge lower management fees in the range of 1% or 0.75%. Now this is totally at the discretion of the asset management company. The management fees are charged in order to recover the operational expenses of the fund, and this is a recurring expenditure for the partners. That means this is a expenditure that takes place at periodic intervals, okay, of the fund. The fund of the asset management company, let's take an example, okay. Let's say has got three limited partners. The first limited partner, LP1, has contributed $100 million. The second limited partner, LP2, has contributed $75 million. And the third limited partner has contributed $150 million. If the management fee is 2%, okay, now management fees normally never exceed 2%. They could be much lesser than 2%, but as I already mentioned, this is totally at the discretion of the asset management company as to how much they're going to charge. The first limited partner, LP1, has given a capital of $100 million. So the management fees over here is 2% of $100 million, that is $2 million. This explanation is fairly simple, it's fairly straightforward, it's easy to understand. Let's take another example of limited partner 2, who has given a commitment of $150 million. Okay, what is the management fees over here? Please note, management fees is a percentage of actual capital contribution, not just capital commitment. Okay, so this question is a little tricky. You must remember that when they ask you this question at interviews, whether it is a percentage of capital commitment or capital drawdown, you must be crystal clear while explaining that the management fees can be charged only as a percentage of capital drawdown, not as a percentage of capital commitment. So in this case, we cannot charge the management fees from second limited partner because we have not yet drawn down the capital commitment. We haven't yet drawn it down, and this is as per what is the data that is provided in the content over here, not anything beyond that. Okay, so the second part of it is management fees, another tricky part of it. Okay, let's listen to all the tricky aspects of management fees. Let us say in this case the beginning AUM, that is the assets under management, is $500 million. Can the fund charge management fees? No. Only if all the capital is deployed can the fund charge management fees. So we have to start investing that money. Okay, so if the fund starts off with AUM, they can't charge at the beginning of the period, they normally will charge at the end of the period. So let's say the beginning AUM is $500 million. At the end of the year, the assets under management is $550 million, then the management fee is 2% of what? Okay, now this is another trick question. The trick question is it a percentage of $500 million or is it a percentage of $550 million? So I just mentioned that management fees is normally charged at the end of the reporting period. And therefore, the management fees is 2% of the closing AUM. That is the $550 million. Over here, we're talking of only management fees, which is a direct percentage of AUM, not the incentive fees, which is a percentage of the outperformance. Okay. We now move on to the next one. At the beginning, AUM is $500 million. At the end of the year, the AUM has decreased to $450 million. Over here, we find that the fund has not been able to perform better than the beginning AUM. Okay. The management fees is 2% of what? They can charge 2% of 450 million. Okay. So therefore, it is very important to remember that management fees is charged as a percentage of the end of the year AUM. It is an annual fee, but it can be recovered on a quarterly basis, which means most of the funds do. It can be recovered on a monthly basis as well. The frequency could be monthly or quarterly. Very rarely does it go beyond monthly or quarterly. Many funds would find it very difficult if they were to charge only annually. So while some funds charge quarterly, some rare funds also charge semi-annually. Management fees has got two different aspects. The first one, as a fund administrator, you must know whether the management fees is accrued. Accrued means it is owed, but it is not yet paid. Okay, so this concept of accrual is very important because we recognize that the fund must charge only those fees. The fund can charge management fees if it is accrued. That means it is due to be paid. In this case, the journal entry is fairly clear. Debit management fee expenses and you to credit the accounts payable because we have to make the fee of payment of management fees. On the other hand, if the management fees is paid, what do we write? We debit the management fees payable and we credit cash. Cash is going out of the fund into the general partner. Okay. What is fund accounting? Fund accounting is a function of compliance, reporting, tracking, managing and reporting all the financial transactions, valuation of the assets as well as performance measurement of the fund. If you like this content, subscribe, like, share and comment. Okay, so that I will also be motivated to put in more such research-centric, content-focused videos in the topics of fund accounting, trade life cycle, OTC derivatives, as well as corporate actions. Thank you so much for watching in.